Hey guys, it's Rudy coming at you live from Palm Beach in Florida. In sunny Palm Beach, it is hot. It is summer. And today we're going to talk about mining, micro caps, small caps, junior mining companies, the type of investments where your sky high risks sometimes deliver sky high returns or not. Let me get my presentation up here and I'll show you what I'm talking about. If you look at this map, you will see a couple of things at a glance. The first thing is you will see some geographical diversification, which is critical. The reason why I'm mentioning that is because, for example, last year, sometime in Niger, in Northern Africa, there was a military coup, and small cap mining companies, amongst others, saw their assets just whoosh disappear, the same way my Wi-Fi sometimes disappear when I do a Zoom call. So I have some geographical diversification here. In addition to that, you'll see some metals or mineral type of diversification, right? I have gold, uranium, I have coal, I have silver, I have copper. So there's a whole variety of different resources in here that you should probably pay attention to. The next thing you can pay attention to, and by the way, the red arrow shows you some of the new additions to my portfolio. But the next thing that you should pay attention to on this map, which is critical, is that you'll see at least 10. And you may say to yourself, like, why would I pick 10 stocks? Well, if you stick with me, I'll show you in just a few minutes. But this is kind of what it looks like in terms of my geographical diversification as it exists right now. So let's talk a little bit about mining as we look down the shafts. And that sounds incredibly rude, but I actually literally just mean you need to do some due diligence before you make an investment. There are ways for you to shortcut some of your due diligence, which includes watching videos like this. But really, what you want to do is make sure that you are familiar with the management team, their history, where they come from, their past track records. It's not a bad question to ask a CEO if you get a chance to speak to the CEO. What did you do before? How did you get here? How long have you been in this role? Do you like it? Etc. These are just normal human questions, right? Sometimes, in fact, most of the time, for some of these that I'm going to share with you right now, I invest in the person before I even invest in the company. If the person does not make me feel warm and fuzzy, there's no investment coming. The other things that you want to know is, are they currently in exploration stage? So are they an explorer, or are they a developer? Are they an operator, which is also sometimes called a producer? You need to know, do they have cash, or do they need to do a financing round, or are they going to dilute you as a shareholder by offering more stock for sale? Those types of things are critical, and those are just basic fundamental things that you need to know before you make any investment at all. In addition to that, especially if it's a junior company, not only do you ask how much cash do you have, but you also ask what your cash burn rate is as applicable, right? Because if it's producing and already an operator, the revenue from production can fund any additional costs for exploration and production, etc. But if they're not, so if it's an explorer, they are burning cash. How much cash are they burning? I just spoke to a company last week. They said they have about $85 million in the bank and they're burning at a rate of $15 million per quarter. It's a fair question to ask. So after 3 or 4 quarters from today, how will you raise money? Because if you're going to raise money by issuing more stock, you're diluting me as a shareholder, right? So those are things you need to know. AISC sounds like a secret code, but it really just simply means all-in sustaining cost. What is your all-in sustaining cost for whatever it is that you're mining? By way of an example, if their all-in sustaining cost to mine gold, the shiny stuff, is $1,000 and the spot price is currently $3,400, then you can actually easily calculate and quantify their current production or their volume of expected production multiplied by the difference between the spot price and the all-in sustaining cost. So those are things that you'd like to ask and things that you should know. If they are exploring specifically, then you want to know, what is your pathway to production or your strategy? In other words, where are you going to go next? So remember, these are things that you want to know, in addition to many, many other questions that you can ask. I'm just sharing the highlights reel with you here. So these are the 10 stocks I'm going to discuss, and I'm going to walk through them quickly so that I don't bore you to tears. And right at the bottom on the right-hand side here, you can see Rule Investment Media. If you are familiar with Rick Rule, you can look him up on YouTube. Rule Investment Media makes many, many videos available. And where I've placed check marks as I go through this presentation, you will be able to find an interview with the CEO of the company and Rick Rule on his channel. And that can be part of your due diligence as well, so that you make sure that you make good investments for yourself and make sure that you secure your financial future. So in alphabetical order, this is what it looks like, and I'm going to go through them one at a time quickly. Many of them are similar, either because they mine silver or they mine gold or whatever the case might be. And in addition to that, they are already operating or producing. Some of them are explorers, and one of them is uniquely different. I'll tell you about that as we go, and I'm going to go through them quite quickly. So let's get into the wheat of this or into the meat of this, I should say, and show you what's going on here. So if I reflect those 10 positions on a pie chart, why 10? Well, I'm going to tell you in a minute, right? Why 10? If I show you a pie chart, you'll see that the weighting was more or less equal at the start, but it's no longer equal today. So the larger slices here, Uranium Energy and Sierra Madre, are larger because since I've owned Uranium Energy for about a month, it's up 45, 50%. And since I've owned Sierra Madre for about a year, it's up about 100%. That's why those slices are larger. Others have pulled back a little, like Heliostar and Vizsla since I bought them. But in general, my weighting is more or less equal, except for the fact that I would automatically allocate less capital to an explorer than what I would, for instance, to a producer or developer, because the producer and developer is making money and the explorer is burning cash, right? There's a critical difference between the two. So what I've done here, so I asked the question, why 10 stocks, right? And this is what I'm showing you here. Let's assume I invest in 10 companies. This is fictitious, and I invest $1,000 in each of them, which is a total allocation of $10,000. What's my maximum loss on any one position? Well, $1,000. You cannot lose more money than what you put in. So if I put $1,000 into company number one and it goes bankrupt, it is worth zero. That's the most I can lose. On the other hand, what's my upside? My maximum gain per position is infinite because the company can go from my $1,000 that I invested to whatever, even including a private yacht and a private island. Okay, well, that's probably stretching it a little bit, especially if you invest $1,000, but I think you get the gist, right? So what I've done here is I've taken 10 fictitious companies and said I've invested $1,000 in each of them. And after 5 years, three of them went bust. These are those three red arrows here. So they're worth zero. Three of them went nowhere. That's already 6 out of 10. Two declined a little bit. One of them gave me a small little gain here, $1,500 after 5 years. Why is it small? Because if it can compound at 15% per year, you can double every 5 years. And this one only went up 50%, not 100%. So it's decent and it's okay, but it could have been better, right? But I have one outlier. I invested $1,000. Maybe this company was acquired. Maybe they merged with someone else. Maybe they suddenly found additional production and uncovered more wealth. And this one popped and I invested $1,000 and exited with $20,000. After 5 years, my portfolio is worth $25,500, which is 250%, even though the majority of these companies have failed or not really delivered much at all. So you can see kind of where I'm going. And this is very, very possible, even though it's fictitious. You only need one, maybe two winners. If you get more than that, that's really, really cool. So one by one, in alphabetical order, very, very quickly. Amerigo Resources produces copper. They are active in Chile, in South America. The reason why this one's attractive for me is a little different to the rest because it actually generates a consistent cash flow and it pays out a juicy dividend. Right down here at the bottom of the screen, you can see a dividend yield of 5.58%. Aurora Davidson, who's the CEO, I'm going to invite some of these people onto the channel so that you can hear from them directly as opposed to listening to me, said, Amerigo's capital return strategy returns quarterly dividends, performance dividends, and share buybacks. During the second quarter, Amerigo returned $7.6 million to shareholders, bringing the total capital return during the first half of the year to $12.1 million. Their cash costs, so remember all in sustaining costs, their cash cost for Q2 2025 was $1.82 per pound. Remember, this is copper. And the average selling price was $4.42. So what you can do is you can take the difference between the two, multiply it by their production, and you can calculate for yourself how profitable it is and why it is that they are able to return so much cash to shareholders. How about Aris Mining? So Aris Mining is a company that is currently an operator in Colombia, and they're currently busy exploring in Guyana. This company is another company that you can look up on Rule Investment Media. So anytime you see the little green check mark here at the bottom, you know you can see some CEO interviews on Rick Rule's channel. This company is in a great, strong financial foundation position. It has cash on hand of $240 million as at the end of last quarter, and they have a debt obligation, which is a bond that matures in October 2029. So in a pretty good position. And you can see as I go along, let me just go back quickly. Over 5 years, I'm showing you all these screenshots of from 5 years, even though some of them have not even been public for 5 years. But you can see all of them have generated, for the most part, a reasonable return, or otherwise they're down a little bit. I'll talk about that as we go. That's Aris Mining. The next one is Aya Gold. Aya Gold is operating in Morocco, in Africa. They have a super mine called Zagounder, which is a silver mine. They have a really, really uh, very, very fine gentleman who's their CEO, Benoit Lassalle. And we'll see if we can get him on the channel as well. This is not a small company. It's got a $1.7 billion market cap. Exceptional performance over the past five years, up 400%. Do they have money in the bank? You bet. They got $150 million cash in the bank as we speak right now, probably a little bit more, or maybe a little bit less than that, depending on the date. Obviously, cash, it's like stocks, right? Up and down. Emerald Resources is an interesting company. This one's a bit of a sleeper for me. I found it by chance. They don't really promote, so it's not easy to find these companies. But this one is active in Cambodia, even though they're headquartered in Australia. They have an exceptionally good world-class gold deposit at the Ok Vahu mine in Cambodia in Southeast Asia. This company is well positioned to make lots and lots of money. I'm looking at their quarterly printout here. It says AISC, all-in sustaining cost of $850 per ounce. This is gold, right? So all-in sustaining cost of $850 per ounce. Gold is currently selling at about what, 3,400 bucks? Pretty good, huh? Nice one. Over the past 5 years, 400%. Heliostar has pulled back over the past 5 years, but I only invested in it last month. And around about here, they had a change in management. So that's why the graph actually is a little bit deceptive, because there's been an uptick since the new management has come in rather than a sort of downtrend on this one. This one's got a good news story as well. Heliostar was waiting for permitting in Mexico from the Mexican government for their mine at St. Augustine. And they just received that like literally maybe 2 weeks ago or so. So they can actually start mining that now and start producing. And you can see their target production here, over 500,000 ounces of gold by 2030. Lots of potential upside for you here. Who knows, right? We'll see how we go. Nucor Gold is an explorer. They're in Ghana. Ghana is the treasure chest of gold in Africa. There are a lot of large mining corporations surrounding the permitted properties that are owned by Nucor. I asked Luke Alexander, who's the CEO of Nucor, what the strategic plan is, or the pathway to production, because it always feels to me, especially when you're surrounded by big guys, that you might be acquired. He said, no, we're going into production. So then the question is, do you have enough money, right? So right now they're in a good cash position and don't have any debt. But there's always dilution risk when you're an explorer and you want to start developing, because it is expensive, man. It costs a lot of money. So we'll have to see where this one goes. So I would automatically allocate a little bit less capital to Nucor because it's higher risk, because it's purely exploration. Sierra Madre is a combination. They are exploring, but at the same time, they bought some older mines from First Majestic, and they've been producing from those mines. And their flagship project right now is called La Guitarra, which is in Mexico. And the CEO, Alex Langer, has really, really done an awesome job. He's actually outperformed his guidance on a whole variety of different topics. In other words, just by way of example, if they said they were going to start production, in July of 2025, they actually started in like January, February, or whatever. So in other words, this is a kind of guy who under promises and over delivers, not the other way around. They are generating revenue. However, there's always dilution risk, as I just mentioned with Nucor, when you need to fund ongoing capex and for capital needs. Sierra Madre has been good to me. This price is in US dollars. I invested in Sierra Madre about a year ago in Canadian dollars. My cost base is about 38 cents, and Sierra Madre is currently trading at about 76 or so, almost double. Uranium Energy has been an awesome addition to my portfolio. It's better to spend time in the market than what it is trying to time the market, right? But this one, sometimes you just get lucky. So on Uranium Energy, and by the way, I did mention that a couple of others have pulled back, like Vizsla and Heliostar, but on Uranium Energy, I just kind of got lucky because I got into it with a cost basis of around $6.60 just a month ago. So it's up 45, 50% just over 1 month. And of course, the Trump administration is very, very kind to uranium energy, being a US uranium producer. It's generating revenue from its production and it's able to fund all its exploration through its cash flow. The other thing that's nice about uranium energy specifically is cash, inventory, and equities, $271 million. Debt, zero. That's a good position to be in, huh? How about Vizsla royalties? If you've never heard of a royalty company before, don't worry about it. Sometimes we learn everything, it's something new every day, and today is the day you're going to learn about royalty companies. So Vizsla royalties is not the same as Vizsla silver. I actually have a bit of a mix here because I've diversified across both of them. I have Vizsla royalties and Vizsla silver in my portfolio. If you've never heard of a royalty company before, here's a quick definition for you. Royalty companies provide upfront capital. It's almost like a bank, right? So it's a financing or financier. They provide upfront capital to mining companies in exchange for a percentage of future revenue, which is called a royalty, or the right to purchase their metals at a fixed price in the future, which is called streaming, right? So they basically generate income without having to operate the mine. It offers a lower risk. The overheads are almost next to nothing. In fact, the people who run Vizsla Royalties are the same people who run Vizsla Silver, but the royalty company funded the smelter at Vizsla's Panuco project in Mexico. Vizsla, the Silver Corporation, I own both, is an explorer, but they are also doing some development. This company is well positioned for growth. It's another one you can look up on Rural Media. It's mostly pre-revenue, but it's currently funding exploration and development through financing, which means there's some dilution risk there. However, on the upside, Vizsla is showing cash on hand of over $200 million and pretty much no debt, right? So that's kind of where the story ends, right? So I know I went through this really, really quick, but you can chastise me in the comments, or otherwise you can chastise me for taking too long or taking up too much of your time. But what do you want to do here? Do you want to buy, sell, or hold, or just avoid and run for the hills? So what I'm going to do here is see if I can invite some of the CEOs or investor relations people to join me in a discussion, so you can learn more about these companies if you're interested. And what I'm going to do from a personal point of view is revisit some of the energy positions that I haven't talked about for quite some time because I've been away and I've been traveling and attending conferences and symposiums and all kinds of stuff because I've been back to school, back to mining school, that is. So that's what I'm planning for to do next, right? So in the meantime, if you like the content, please hit the subscribe button because at least it gives me some motivation or helps to keep me motivated to make some more content for you. And I think on the next video, I'll be back with some energy stocks, maybe an overview of some of the energy positions I still hold. As I said, there's not been much change, but there are positions like XLE, which I use as a parking lot for cash awaiting investment. So I park the money into XLE, and when something that I might want to invest in comes along that I think is a good deal, like some of these, then I'll take some money out of XLE and allocate that capital to a new investment. So that's the story for now. Hit the subscribe button, and I look forward to your comments. I read them all, right? Promise. I actually do read them all. So I look forward to chatting with you. Let me know what you think. And until next time, take care. Bye bye.